as we are discussing since morning, the inauguration session about the KCC, importance of KCC and its ecosystem and how why and how it is very much required for this Indian agriculture. See, this subject KCC is a old bank product of 1998, but still we have to do lot of things in this KCC, and we have to cover the entire country's farmer. Even with this all the lending since 1998, bank has not covered all the farmers. So today we are going to discuss about the overview of agriculture credit and Kisan credit card. First of all, the KCC is at present is the backbone lending product, you can say, for the farmers. Agricultural and land sector in India, this engages 54.6% of the total workforce in country, and secondly 18% of the gross value added in the country's GDP. Third is the India is amongst the 15 leading export in agriculture products. So now our country has gained after this after independence 15th position in the agriculture export, and resilient growth in 3.9% in 2021 despite COVID-19 shock. Supports 17.8% of the world's population and 15% of the livestock population. See, this shows that after independence we have done a lot of things in agriculture, and this agriculture has become the backbone for this country. Until unless we are not providing the sufficient amount of credit to this farming community, the growth what we have achieved cannot be increased to the extent as desired by the government of India. So the importance is in the agriculture as well as allied activities, both have parallelly grown, and now we are at a very comfortable position, you can say, in the world ranking position to have a agriculture produce with which we can provide support to other countries. Next slide. Need for agriculture credit in India. The basic requirement for the farmer is the for cultivation is the credit. Until unless credit is not there, how they will manage their entire operations in the agriculture. So the prerequisite for agriculture growth, financing is specially adapted for specific finance needs of the farmer. Here, the specific needs means suppose a cultivator is growing particular crop, he needs seed, fertilizer, everything, and similarly for other activities, he needs fodder and other equipments and maintenance of farm assets. These are the expenses he need while cultivating. So these are the prerequisite for agriculture growth, and financing especially adapted to the specific finance need of farmer. Second, dominance of small and marginal farmer, owing 86% of the land holding of less than 2 hectares, short-term credit requirement is higher. As our Indian economy, 86% of the farmers are small and marginal farmer having less than 2 hectares of the land holding, and they require their number is more, so they require all this short-term credit for their KCC in terms of KCC for cultivation, and here is the scope for the banking institution or financial institution to jump into this economy and help the farmer by way of providing KCC so that they can be they can grow their farms and agriculture productions in a better manner. Only 48% irrigation facility, high vulnerability due to the natural calamities. This is another area where in our country we could provide only 43%, 48% of the irrigation facility to all the farmers, and remaining 52% of farmers are still dependent upon the nature's rain-fed crops or on the rain, and they, because of the much dependence on the rain and natures, they face a lot of natural calamities, and that becomes a very difficult situation for the farmers, how to come out from this situation and once again start the agriculture production. 52 points of the farming households are indebted. See, this is another highlighting point. Although we are financing under KCC from the different organizations, different financial institutions, and there are private stakeholders are also there who are lending, but still 48% are not under the credit. They have to be brought under this credit platform so that they can be also benefited with this benefit of the CC and lower rate of interest and you can say the interest of the benefit. And simultaneously,
ये क्या हो गया कहीं भी माइक खुले हैं
and simultaneously, so they can get a credit from the bank and they can grow their, they can develop their cultivation or farming practices in a better manner to add more production to the country. 30% of the rural households still opting for a non-institutional credit as per the report. So here also, out of total credit offtake is from the public sector bank or financial institutions, the 30% still in the hands of the non-institutional money lender. You can say the money lender at the village level. So the way they charge very high rate of interest, and the time has come that we should support all these farmers to come out from this clutches of the money lender, and they should get the credit from the uh, public sector bank or other financial institution. The very purpose of elaborating all these points are that now we have to motivate the farmers at the village level by conducting so many programs that they should join in this credit program, KCC program through the nationalized banks or financial institutions so that they can get this credit at a cheaper rate and they can grow better as they are doing. Next.
All the participants are requested to please mute microphone.
Source of agriculture credit. See, there are two type of sources. One is institutional credit and other is non-institutional credit. Institutional credit is mainly aims is to provide credit at cheaper rate of interest. This is being done by the all nationalized banks and financial institutions like RRBs, cooperative bank, and there are other sources. Here it is. Okay. There is a second source that is non-institutional credit. Is a traditional source credit, also known as the informal source of credit. And this is almost a money lender, and they charge very high rate of interest. So the cost has become very high for the farmers to take this non-institutional credit. We have to develop and we have to promote and educate the farmers in such a way so that they should rejoin the nationalized bank or the institutional source of credit so that they can get the benefit from the government of India also what we are giving through interest subvention and lower rate of interest, or I can say 7% of the rate up to 3 lakhs in KCC. The other source is an institutional source of credit card in a different forms. Like first is commercial bank provides loan to all the agriculture purpose for short, medium, and long term. Here we cover under commercial bank we finance for the short term like fertilizer, seed, and other, and for maintenance of farm animals, farm assets, and to some extent consumption expenses also for 10%, and remaining we are financing for the term loan also if some farmer wants to establish a dairy unit or orchard or something. So that is also being covered in the ACC and it is being financed by the nationalized bank. Regional rural bank, this is almost similar to the nationalized bank. This is all RRBs are sponsored by nationalized bank. They are opened up where there is a no banking facility. The purpose of opening of RRBs was there, where nationalized banks are not there, they should go and open so that credit reach should be available to all villages, all farmers. And third is the cooperative credit societies. This is a traditional method of the banking in the society, and that now it has become a good source of agriculture credit. And as far I know, 60% of the KCC borrowers are still uh, taking facility from the cooperative banks only. And their aim is also to ensure timely and rapid flow of credit to the farmers. And they charge lower rate of interest as compared to the nationalized bank, also 0.5% or so, little bit that only. So this is another third source of credit for the institutional finance. And fourth is the self-help group. This is a recent development for past few years that in village area they form a self-help group, they take loan from the bank and they distribute among themselves also for the agriculture purpose. So this has also become a good source of the farmers at the village level to take and they do not, sometimes they do not charge any interest also, and if at all they are charging, it is a very low rate, and it is SHG is developed in the concept of the mutual help. So this is these are the four sources of institutional credit for the farmers. Next, type of agriculture, types of agriculture credit. Agriculture credit is basically three part: short term, medium term, and long term. And duration for short term is not exceeding 2 years, and medium term, that is 5 years, up to 5 years, and long term credit more than 5 years. Purpose: to carry out farming and other activities like meet expenses for purchase of seed, fertilizer, water, high yield variety seeds, etc., and other farming needs also. Even up to post harvest, these all are covered under the short term credit. The second, the medium term credit: purchase of cattle, equipments, tractor, farm machineries, and make improvement on the land also. So this is the purpose of the medium term loan, which is being sanctioned by the financial institution. And here they have to pay in a half yearly or yearly installment or monthly installment as fixed by the bank. Third is the more than 5 years. This is for the irrigation facilities. If they want to fix in the, they want to install in their farm and making permanent improvement on the land, like land leveling, land reclamation, all these things which are the long duration activities, and its effects also being for the long time. So here repayment period may go up to 12 years also, and beyond that also if bank wishes. But generally, these three components of loans we are granting to financial institution. Repayment, similarly, normally it is repaid after the harvest of the period or within 1 year. And secondly, for the medium term loan, after 5 years, means up to 5 years they can pay, or beyond also there is no issue. But installments are being fixed as per the income generation from the activity. And here the long term half yearly or yearly installments based on the economic life of the assets and income generation. Same way, if some farmers go for orchard or farm forestry, so the agriculture forestry, then in that case also we can finance to a long-term loan where, and so many constructions are there in the farm, like poultry house, these poultry house, animal sheds. So these all can be covered in the long-term loan along with their working capital and animals. Here, Government of India is giving some initiatives to the farmer. First, focus on agriculture credit and uh, priority sector lending. So a special category has been formed by the Government of India to focus more on the agriculture lending in the name of priority sector lending portfolio. and almost all financial institutions are having a wing in their headquarters who monitors these priority credit sectors and how the credit flow is there in the branch level or the field level through their branch operations. Second is introduction of KCC 98 to meet short-term credit need. In 1998, it's a special KCC was devised, especially KCC was devised to lend short-term credit, and this was a uniform system introduced by all the financial institutions. Prior to this, they were doing it in different name. So somebody was telling as a crop loan, crop production loan, so different name was there, and a uniform framework was developed in 1998 for named as a KCC to meet the short-term requirement of the farmers. The interest subvention is the third initiative which we started from the 2006 and 7 MISS and PRA. Here, government gives interest subvention to the lending institutions. Presently, it is 1.5%, and to the good repair who repays their loan in time, like within 1 year of the withdrawal, they get 3% of the interest subvention on the uh, loans which they get from the bank. So this is an annual activity, and ministry used to release a huge amount of fund in terms of the interest subvention, which is in turn through RBI and banks being distributed to the and these to the farmers. The fourth is a collateral free loan up to 1.6 lakhs. For agriculture, KCC, up to 1.6 lakhs, farmers need not give any collateral security. Only it is being treated as a hypothecation of the crop which he has grown. And beyond this, only 1.6 only, he has to bring some collateral security as per the detail. It will be discussed in the next slides. So the basic is this exemption is given that up to 1.6 lakhs of KCC. Nobody else should no farmer should bother that how they will get. They have to bring only the required documents and they can get the KCC. KCC extended to animal husbandry and fisheries in 2018 and 19. From 2018-19, fishery and dairy activity, animal husbandry has been also brought under KCC. And here, interest subvention, first of all, in the KCC, we are giving on the working capital of these activities, like animal husbandry, the fodder cost, medicines cost, and other maintenance cost for the animal, that is being covered in the KCC along with crop production of the KCC or independently. Similarly, the fishery loan are also being covered along with KCC, crop production, or independently also they are doing. And this will be treated as under the name of the KCC. But working capital loan, working capital requirement will be covered under the KCC. The last one is the KCC and MIS portal under the digital innovation in agriculture. We are in the process of developing a KCC MIS portal where all the data will be captured, and in due course, this claim process and claim processing and distribution to the farmer's account, or you can say the credit of the interest subvention portion to the farmer's account will be online, and there will be minimum manual interference. So we are in the process, and I think in the next class, the Pallavi madam is going to cover this portal also, how it is being developed, and what are the things to be done for full digitization of the KCC. This is the ecosystem of the KCC, background and evolution over time. Here actually, the history of the KCC has been elaborated in a nutshell. This KCC was introduced in 1998 with the objective of providing the short-term credit based on the land holding. Initially, it was on the land holding. Credit support to farmers to readily purchase agriculture inputs like seed, fertilizer, pesticides, etc., and draw cash for the production need. Here, earlier, if you remember, the KCC or crop loan used to have 60% for kinds and 40% for the cash component. But after evaluation of the KCC, this has been merged, and simply we give the total cost of cultivation. With that, they can meet the requirement of seed, fertilizer, pesticides, etc., and other labor expenses and other charges, electricity charges. This all comes under the production. Third is the KCC was further extended for the investment credit in a requirement of farmers, allied activities and non-farm activities since 2004. So this was also extended for the same animal husbandry and fishery and poultry, other ruminants, mm, even up to beekeeping, mushroom, and sericulture. These all activities have been already included, and working capital requirement in these all crops are being covered under the KCC along with crop production. Scheme was revisited in 2012 to facilitate issue of electronic credit card, that is RuPay card. In 2012, the RuPay card was introduced. The purpose, as its name is there, KCC Kisan credit card. The card came in the picture only after 2012, where a plastic card was supposed to be given, and it was in some area it has been distributed to the farmers also. With that, they can withdraw the money through ATM also. And even this card is so useful that in mandi and commission agents can credit their proceeds price also through this card to the KCC account. We can draw money, we can swap this card and purchase the seed, fertilizer, and all these items in point of sales. KCC extended to animal husbandry and fishery 2018-19. This already I have explained. Background of KCC evaluation over time. Same way, KCC evaluation, same 1998, the credit card was introduced, providing farmers with adequate and timely credit support from the banking system and agriculture for agriculture activity in a flexible and cost-effective manner. This is the history of the KCC evaluation. In 5 to 8 to 1986, again KCC has been some changes has been brought in this 2004, 2012, 2019, and from 2019 this Aadhaar linkage was made mandatory for availing the KCC loan, and ISS expenses extended to include KCC working capital loans for animal husbandry. Here also Aadhaar is made mandatory. Salient feature of the KCC model. This aims to provide adequate and timely credit support from the banking system, institutional finance. The purpose was that we should provide more number of farmers as a KCC from the banking institutions. Second is short-term agriculture loan up to 3 lakhs at the concessional rate of 7% per annum for the farmers engaged in agriculture, animal husbandry, and fisheries. Here, up to 3 lakhs, Government of India insists that banks should finance at 7% interest, and if happens to they get the prompt repayment incentive, the actual applicable rate for the farmers will be only 4%. So this is the incentive by the Government of India. And a single window system with a flexible and simplified process. So a single window means a single KCC account will cover all their requirement, their short-term requirement, their maintenance expenses, even the consumption expenses, and plus purchase of animal and other term loan in terms of profit. And prompt repayment incentive is the 3%. That is the already I explained that those who pay their installments and amount due in time, they get the 3% of the interest against the PRA in the name of PRA. Government of India provides the interest subvention to eligible banks up to 1.5% for the currency to KCC. Those banks who finance the KCC up to they are getting the 1.5% for the. It's a reduced interest rate at to 4% per annum for early loan repaying farmers, and will encourage them to avail the benefit of short-term loan under schemes. As I explained, that banks are giving at 7% loan because 1.5% by government is giving the incentive to the national all banks to finance KCC under 7%, and 3% is PRI, prompt enrollment incentive. If they are eligible for this and if they get this 3%, their loan rate of interest remains only 4%. Farmers can easily apply and can avail credit from the ATMs through RuPay credit card, RuPay Kisan card, debit card. So this card is enabled for the purpose of farmer to take the money from the ATM card. Need not go to the bank branches all the time for availing the disbursements. Any number of transactions can be done, withdrawal and repayment. This is applicable for both for the branch operation as well as the ATM operations. Kisan credit card valid for 5 years, subject to an annual review. Annual review only because every year we are renewing the KCC, with reviewing the KCC and increasing the 10% limit. So every year it is to be reviewed only. So no collateral is required. Loan required for loan up to 1.6 lakhs. So beyond only 1.6 lakhs, they have to provide some collateral security. Bank will issue Kisan credit card within 15 days after verifying the farmer's credentials, or shall show the reason for rejection. If it is not available, then they will show. Otherwise, within 15 days, they have to issue the Kisan credit card and issue a debit card also along with that. One-page form and one-time documentation at the time of registration and simple declaration from second year onward is provided to make the process hassle-free. One-page application, which is attached next slide. Ministry has developed one-page application, and this application you can fill up in the branch also, and if CSC also, the customer service point also, if you can get time, we can fill up and submit to bank for the sanction. When it will be digitized, I think these all forms will be available in the portal. KCC component, Kisan credit card. Objective to provide the adequate and timely credit support under single window of the farmer. At one place only, they will get all their farming requirement. Short-term credit requirement for cultivation of crop, post-harvest expenses, produce marketing loan, consumption requirement, and working capital for maintenance of farm assets and allied. These are the 5 components of the Kisan credit card. And accordingly, this short-term credit means they require the fertilizer, seed, and all these things. Post-harvest means some process is required in the after post-harvest. That expenses also will be covered here. Produce marketing loan. So if the produce are being kept in the warehouse receipt, against the warehouse receipt under E&WR, there also this facility will be provided at the same rate which is applicable to the KCC. His consumption and other maintenance is already clear. And the second is for long-term credit, which is the investment credit requirement for agriculture and activities. This is for the creating some assets like purchase of animals, purchase of some business, etc. will be covered in the term loan component. And these are the 2 major components of the cases. Eligible lending institutions. See, farmers, individual joint borrowers who are owner cultivators. These are the farmers who are cultivating. Those farmers who are cultivating the individual farm and then joint, they all are eligible for getting the KCC loan. Tenant farmers, oral lease, and sharecroppers, they are also eligible for getting the KCC loan under the Flexi loan scheme, which is up to 50,000. And here, some governments are issuing the certificate also as a tenant farmer. Otherwise, the local authority and bank can take a decision. They can finance to the tenant farmers and DC also, oral lease also. And third is the self-help group or SHG or JLG, where some farmers joins together and make a self-help group or JLG. They can also avail the KCC loan from the institutions. So it's here the certificate provided by the local administration Panchayati Raj institutions regarding cultivation of crop. This is applicable for the tenant farmers under oral easy. And if they are not able to get the certificate from the concerned government, they can submit an affidavit submitted by the landless laborers, sharecroppers, and oral easy, giving occupational status. So these documents, if they submit, they can also get the ACC from the financial institution. Eligible lending institutions is public sector bank, all public sector, private sector banks having their loans are given by the rural and semi-urban branches, small finance banks, regional rural banks, state cooperative banks, district central cooperative banks, and computerized primary agriculture credit societies. These all are the six institutions in the Indian economy. They support to the farmers in granting the KCC loans. Eligible for MISS and PRI. Here, the subsidy, the MISS and PRI subvention, inter-subvention portion is being given by the government of India. And under this modified ISS inter-subvention scheme, the rate is 1.5% of the for the bank. Whatever the rate charge on the loan availed by the farmer, they charge 1.5%, and that this 1.5% will be reimbursed by the government to the bank, and prompt repayment incentive in terms of 3% when farmers repay the loan in time or within the stipulated time. For crop production is 1 year, so he becomes eligible for the 3%, and this amount is being credited to the in the farmer's KCC account. Eligible for MISS and PRI. See, this for eligibility to become a farmer, to avail this facility, the number one is for cultivation of crop and post-harvest expenses up to 3 lakhs. Up to 3 lakhs, he will get the MISS and PRI. Second, for allied activities related to animal husbandry, dairy, fishery, lakh cultivation, mulberry cultivation, sericulture, and beekeeping. Under these activities, he is eligible for only up to 2 lakhs of the to 2 lakhs. This will be covered under the interest subvention scheme and for PRI also. The IS and PRI amount are to be calculated on the loan amount from the date of disbursement up to the date of actual repayment of the loan by the farmers, or up to the due date of the loan fixed by the bank, whichever is earlier, subject to maximum period of 1 year. And the PRI in benefits would accrue to only those farmers who repay the eligible loan on time. That is 1 year, within 1 year. It is mandatory to link the KCC accounts with Aadhaar for availing the benefit of KCC. This has been recent modifications in the 2022, that now these facilities are must be all KCC loans are to be seeded with Aadhaar, and this will be available. And KCC interest subvention will be available only in case of KCC loans. This is a single page format which has been devised by Ministry of Agriculture, and now we are going to upload this in the portal also. This application independently also they can take printout, and branch will have this copy. All banks will have the copy, and they can submit this application along with their land record, Aadhaar detail, or if any bank details are there, to the nearest bank, so that they can get the hassle-free and earliest the KCC loan from the bank. So this is the single page application. So thank you very much. Basically, I have covered that KCC history from the how this KCC has been introduced, who are the eligible institutions, who are the eligible farmers, who are the what are the government's initiative in that government is giving, and these all will help you to motivate the farmers in the village area, so that maximum number of farmers who are not covered under the KCC can be brought under this KCC. Thank you very much.